Wednesday afternoon, 1:38 p.m. Pacific, and I have Miss Patricia Kennedy here, ready to talk a little bit about and go through the mortgage pre-approval process. So super exciting. I actually
So
haven't
excited.
I know. I haven't done this exact video yet with any of my real estate partners, so I'm stoked to kind of go through this a little bit, Patty, how you want to basically ask or direct the pre-approval process from a customer or potential home buyer's lens. You know what I mean? So
Mhm.
we'll go through a little bit of, I know that you have a list of nice questions there on what normally comes up with your buyers on your end when you're talking to people for the first time, potentially about buying a house, how to qualify, what to do, so on and so forth. What else? So tell me a little bit about first, maybe just a couple experiences you've had recently with, especially right now in this market where it's starting to kind of move a bit faster
Mhm.
than we've all been used to this last 6 months. What have you been seeing or experiencing currently? I feel like right now with some of your buyers.
Right now, what I'm getting a lot of is, like these little like subtle text messages or messages on Instagram about, hey, I've been thinking about buying, and hey, I think I'm ready now, and I'm tired of waiting.
Got it.
What is everything looking like right now? Like, do you think it's a good time? And I just get like these like questions from different different potential buyers for this year.
Okay,
Um,
cool.
yeah.
Are you fielding those questions like I'm just curious from my end, like when someone asks you kind of like that type of style question, where's the market at? What's going on with the market? Where's the market? Like, how are you fielding those? Because I feel like a lot of times too, on my end, and this is something I'm always trying to keep top of mind is I like to really try to drill down into setting the right expectation for someone from the beginning. Where on my end too, I'm trying to make sure that they know that we don't know what the market is going to look like in 6 months, 12 months, 18 months, or whatever. So, how do you kind of field those questions with them? Or how do you like, because this is even before you dig into the pre approval process, right? You haven't even started yet talking in detail with these people.
Right. So I usually like to ask them, like how long have they been thinking about buying? Is this just kind of something they came up with, like, on a whim, or is it
Yeah.
something that they've been contemplating for months or years? So that lets me know how serious they are. And then in regards to the market, I tell them, what I know about the market, like what I see the
Yeah.
numbers doing, the stats. I give them all that information, and then I let them make a decision, based on what I say. And usually they'll tell me what they're hearing from their friends or their parents or on the news. And then we just kind of compare, and I'll try to debunk as many things as possible, that
Hmm.
that aren't really factual. And
Sure.
I'm a numbers person, so I have no problem, telling you where inventory is at and the
Yes.
trends that we've been seeing lately. And everything that I say is usually based off of numbers. So like I think once I have that conversation with most of the people, they're able to decide like, hey, yeah, now is a good time and it makes sense. And
Yeah.
it builds that confidence in them.
I think a lot of, especially your buyers, but a lot of buyers in general appreciate that data driven,
Mhm.
evidence based approach, which I feel like when you're especially, potentially buying what will be your largest investment in your lifetime, or at least until you buy the next one, you want to make sure that you have the tools or you're equipped with the tools to make all of the proper decisions that you need to for your life based on, again, data driven or evidence based, education. So that's really good. Because yeah, I'm much the same. I feel like it does set, you're able to build relationships much differently too when you're telling people facts and you're not kind of leading them down a path that, no one
Opinion
really
based.
knows. Opinion based.
Mhm.
Yeah, terrible, never fun. Don't like that myself. Um, so yeah, great job. I like that a lot. So that's good.
Thank you.
Um, what else? So again, too, one more thing before we kind of get into the pre-approval process thing. I
Mhm.
like to make sure that people understand and realize kind of what homeownership means and why I feel like making that step towards homeownership is so valuable to really every person. There might be like a very nuanced niche of like less than 5% of people in the world that, aren't the right fit for home ownership for whatever reason. But I
Mhm.
like for people to understand not just the power of home ownership as far as like an asset class or what have you, but realistically, like when people, a couple years ago, we had people waiting for the market to crash, waiting for the market to crash, waiting for the market to crash. Clearly, it never crashed, right? We kind of continue to help them make the right decision possible based on the data and evidence, but some people just didn't listen. So they've been now paying rent for the last 2 years where they could have owned a home. So I like to just put that not in, put it in people's faces, but I like to like make a point that hey, while we're waiting around for the market to do whatever you think it's going to do, we're also continuing to pay rent each and every single month that you can literally add that cost of rent to what your bottom line dollar amount for purchasing a house inevitably could be, right?
Right.
Because the longer you rent, the more month after month after month you spend towards rent. That's less and less that you're putting either towards the equity in your property or down payment towards a home or whatever. So yeah, a lot of people just don't even realize that. So there's a
Yeah,
lot of ways to win, but I do feel like just educating the client as much as possible from top to bottom is super important. So good job.
absolutely.
Um, what else? All right, so I mean, we can get into. Is that your dog?
It is.
Hilarious. I feel like I'm
Meant
very popular with the animals because yesterday on my live with Maria, my other real estate partner from Berkshire Hathaway, her
mhm.
dog was going wild in the beginning. So maybe it's just me.
I
Might be
forgot
my
to
voice.
close the blinds.
That's
I mean, the
awesome.
bedroom. She likes to look out the window and bark at the people who are outside.
That's cool. I wanna say hi to her later on.
I'm
Don't
sure she'll come say
remind me. Yeah, there you go. All right, cool. So tell me a little bit about what questions you have or how you want to kinda dig into the pre-approval process. So, again, this is very unique from mortgage partner to mortgage partner, lender to lender, bank to bank. So I'm gonna go through and answer your questions on both fronts, right? How
Mhm.
I personally handle for each and every one of my clients and how generally it's handled for each and every client from again either bank lender what have you, so we can kind of get into both. I also can pull up on the during the process or maybe even after I can pull up my website so you can actually see as we click through like what we're kind of talking about a little bit. I might be able to do that as well. So yeah, go for it.
Okay, so I think all of this started when I made that video about pre-approvals, and I thought like, well, we should get on and talk about this publicly so that everyone knows the answers to these questions. So like
Totally.
doing open houses and whatnot, and buyers just reaching out. So they usually ask about the same questions over
Right.
and over. So like one of the things that they ask is like when they go to your website and fill out an application, like
Yeah.
what does that process look like? Is it like super dense of an application? Could they do it on their lunch break, or is it something that they need to sit down and make sure that they have their tax returns and their paychecks in front of them and their bank statements and all like that paperwork?
Right,
Um,
right, right.
so like what does that exactly look like? Like if you could paint a picture for a buyer that's sitting down and going to just fill out that application, can they do it on their phone? Should they get a computer or
Sure.
like
Yeah,
what do you
no, it's a good first question. So, the very first point that I always want to emphasize with any type of new referral partner or new client or new prospective just person looking for a little bit more information, right? Is to very first, if possible, to connect via a text call or email. Okay. Why I say that is because I have these very specific systems in place for each and every person as I'm going to be either introduced to them, working with them, what have you, that will basically outline all of these different steps for you. Okay. So rather than, a lot of times too in the mortgage space or banking space, a lot of times people are like, just go to my website and fill out an application. I'll get back to you in a few days or in a week or whatever, which is
Mhm.
great. That's a possibility, right? I have a very intuitive and what I like to call gamified website that allows you to really go through on your own as easily and simply as possible, if that's the case, right? So, to answer that one question directly, so if you go to the apply online button on my website, it's a gamified, very easy, very simple, just really yes or no type of answers questions, and what you're doing is collecting and populating personal just data and information, real general stuff. But the reason that I say the importance of an introduction before that is because I'm going to be able to set you up on the path of, okay, this is what you want to do. This is where I need you to go. These are the items that I need to collect from you to begin, the pre-approval process, an actual pre-approval process, not just punching numbers in and getting all willy-nilly with, okay, whatever the computer or system will spit out for you.
Yeah.
Because again, even the very beginning of the mortgage pre-approval process, right? Forget about later on getting a pre-approval letter, going shopping. That's, fine, right? We'll get there. But the very beginning part of it, how are you putting together a mortgage pre-approval? What expectations are we setting with the client? How are we going to get to the goals and achieve the goals that we want is very, very important. And that starts with like the very, very first point of contact, right? So,
Okay, so
I mean,
then
as
you would recommend that you have a conversation first, and
yes,
then you'll lead them or direct them towards putting in
yes.
on an application online. Is that what you're saying?
Very much so. Yeah, the
Okay.
the the going online, the website, the application, all that stuff. To be perfectly honest with you, there might be another two alternatives that we might do as well. I might do it with you, either online or in my office together. Maybe
Okay.
you're more comfortable doing that. Maybe I come to you or you come to me, and we actually work on the application or go through everything online together. Like I said,
Okay.
or I can actually do it for you a lot of times as well. You know what I mean? That's another thing too when I'm, me as a mortgage broker and someone in this space that's more relationship based with my clients, I make myself a little bit more available to and willing to go the extra mile for my clients. So as we're collecting these items we need, having conversations, etc., I'll be able to do the application process for you as far as like putting all of this stuff together. Okay.
Mhm. Okay.
Because one thing a lot of times people will ask me is, like if they do just go straight to the website or go there, well, what information do I need to put in there? Do you need to know my exact purchase price for what I'm looking for? Do
Hmm.
you need to know exactly my down payment? Do you need to know how much money I have in this savings account? Like
Yeah, like, do they need to
question.
pre-calculate all those things? And then, like, how do
Yeah,
they know if
you
they don't
wouldn't.
qualify for that
Exactly.
amount? And I think that's where a lot of people, they're like, they start, but then
Yeah,
they never finish the application.
exactly.
Um,
Yeah. That's why
or
you
they'll
never
or
want to.
they'll text me and be like, "Hey, it's asking me how much is my down payment. What should I put?" I'm
How
like,
do you know?
"Well,
Yeah, yeah,
depends.
exactly.
What kind of loan are you getting?" And
Exactly. And that's what somebody in my role should be explaining to you, educating you on, and giving you options of before we go through the loan application process.
okay,
Okay. The application process is simply just for a data collection type of tool, right? So if I'm collecting the data from you via conversation, copies of your qualifying items, so on and so forth, I'm able to do that for you or make it a lot easier for you. One suggestion that I can make for every single person watching this, for you, your clients exactly too, Patty, don't let somebody make themselves an application. Okay. Like, don't, as a client or customer, don't just be an application or a number or somebody that's waiting in line for somebody else to respond to you. Right.
mm-hmm,
Because at the end of the day, you're, a person, a family, somebody trying to buy a house,
right,
and you need a lot of help. Okay. So
mm-hmm,
there's very few people that ever qualify to buy a house, that are going to need very little to no help, right?
right,
I would say it's going to be like less than 1% of people are, 100% ready to go, have every single thing ready to, ready. They have all of their down payment. They have, so on and so forth. So don't make yourself an application. Don't make yourself just a number. Start with that relationship. Start with that conversation. Start with, getting to know not just the person that you're working with, but also what they bring to the table and how they're able to help you. Does that make
right. And
sense?
that's best done through a phone call or a conversation, not
Communication.
online.
Communication,
Yeah.
yes. So
Okay.
that, yeah, like too, like that intro text. So every single time that we have a first time client, customer, buyer, what have you, I recommend to all of my real estate partners to put us on a three-way text or a
Yeah.
three-way email or both right away, because you're gonna be able to link and bridge that communication between all of the parties involved to be able to help one another, right?
Hmm.
So that will not just open lines of communication, but that'll give you an ability to, start asking some of these questions that you might have right away. Start, digging a little bit deeper on going through the process. But
Mhm.
at the very beginning, you want to have open lines of communication, and you want to know who you're working with and that they're a trusted partner. So I feel like that's like super duper important rather than just someone going to a website, because we can all
Right.
go to rocketmortgage.com, we can all go to bankofamerica.com and fill out their application, and in 48 to 72 hours you're going to hear back on a yes or no, you've passed the barrier of entry to the next stage.
Mhm.
So don't be that person. Trust me, it's not going to feel super good when
I
they
think
say that you're not approved, but go ahead.
yeah, I think that's how most people, think that the process is like, you know?
I mean, it
Like,
is
"Okay,
for
well,
most
I'm gonna
people.
sit down and, like, pour myself a cup of coffee, grab my laptop, and then just fill out a couple of things, and then boom, where's my approval or my
And that, I mean,
denial?"
that really, and that it's becoming more of that as we kind of, in the culture that we live in and in the society, as we kind of grow as more of a tech-based society, right? I mean, I'm the same way a lot of times when it comes to things, when I'm making purchases or I'm qualifying for things, right? Like, let Credit Karma tell me which credit card for a balance transfer is going to be the best option for me. Like, let the Carvana tell me what's going to be the best APR, whatever. Like, okay, so that's just, we're becoming accustomed to that a little bit more in our
True.
society as shoppers, right? However, I do not believe that because of how many moving parts are on the mortgage side and real estate side of a purchase, a transaction, which I hate using that word, but I'll use it in this exact one instance. Um, you don't want to you don't want to put yourself in that position, right? Because you're going to
Mhm.
be starting way behind from the very beginning, and most likely a lot of times you're going to be setting yourself up for some sort of disappointment, again,
Right.
if you're not part of that 1% that's
Super
840
well-versed.
FICO. Yeah, exactly. So
Yeah, yeah.
um
Okay.
okay.
So now what kind of questions do most people have to answer, when they go to put in an application? Like, do they need to know exactly like what their total annual income is, what their
No.
expenses are, what their credit card debt is? Do they need
Mm,
to know like those exact things?
No, they don't. So on the actual online application, if and when I'm having someone go to the online application to fill it out, and I'm not going to do that for them or with them,
Hmm.
what I'm looking for them to do on my end is literally just put their personal information in,
Like
as far
name,
as
phone
their, like,
number,
their full name, their phone
email,
number, their email address, points of contact, people that are going to be going on potentially qualifying alongside you, and that is it. Okay.
not like where they
Because
work, where they've worked for the last 10 years,
no,
how
because
much.
I'm gonna have all of that information collected through the item collection process. So
Okay.
again, that's something that it's really up to me to put together for you the
Okay.
right way. Okay.
Yeah.
Because
Sounds
even
easy peasy.
though exactly. So, and then when you go online, you put your personal information in, regardless if you don't put anything else in, it's going to let me know that you've been to the website, that you've accessed everything, that you've given us permission to look at the information. So, those are really the only things that we're looking for on our end and why
Okay.
I would want someone to go to the website. Other than that, it's a very much more tailored to the the customer, the client type of experience, right?
Yeah.
Every person's going to be a very unique type of what we need to put in there, how we need to put it in there, so on and so forth. So
Okay. And now, so since it sounds like it's a very, very general application,
yes.
when they go online, does their credit get pulled right away?
No.
No.
Never. Yeah, yeah,
Okay.
yeah. No, that's definitely not something that, how do you know if you are a home buyer or someone looking to qualify, or you just have general questions? How would you know if you're ready to have your credit pulled without having these conversations first?
Yeah.
I mean,
So
some of the
that's,
time.
yeah.
Yeah, yeah. I mean, if you already somebody that has your credit pulled a bunch, you might not care. But I would highly recommend that if you at all care about your credit in some way, shape, or form,
Hmm.
that you are not just willy nilly pulling credit. Okay, because
Yeah.
yes, when you go
I
online and oh, good.
I have found that most people that I talk to are like extremely cautious of their credit and they don't want their credit pulled. Like if they're on the fence, they always say like, when, well, I don't want my credit pulled. And then I'm
Yeah,
like, well, if you're that close to wanting to buy, I feel like you need to take that jump so that you can get answers. as to, your qualification. I'm sure there's ways for you to ask them certain questions, that might give you an indication, but
100%. Yeah,
um,
there's I mean,
they'll
so
tell you like when they're way off, or when they're gonna need some help, that they
yeah,
should do
I'm
some things first, or when you're like, hey, it sounds like you're right there, so let's go ahead and pull that credit. You have all your
mhm.
deposit down and whatnot.
Yep.
Come on.
And that's a very good point. So that's something through the conversation and the discovery process from that first call and that first introduction that we're going into, right? Because the fact of the matter is that if you're truly looking to buy a house and you're serious, obviously you're going to have your credit pulled, okay?
Yeah.
Now, when that comes, you're going to have anywhere from 14 to 30 days to have your credit pulled. If you're like, someone trying to rate shop, make sure you're getting the best rate. That's a whole nother conversation we can talk about a little bit later too, that I'll also help you with. But yeah, once you do pull your credit, you'll have anywhere from 14 to 30 days per the CFPB and credit bureaus to have your credit pulled by multiple mortgage lenders, and you will not face multiple credit hits. Okay. So if
Okay.
you are serious, though, obviously you're seriously looking to purchase a house, be pre approved, the whole 9 yards, you will have to have your credit pulled. So it is what it is. Now,
Yeah.
on my end, during that discovery and conversation process in the beginning, we're talking about credit, right? So I'm going to already have a conversation with you about, oh, hey, last time that you checked your credit via Credit Karma or one of your credit monitoring apps from your credit cards, what was the score that you saw? Couple
Yeah.
of very important questions that we need to know on our end is, have you ever filed for bankruptcy, or have you ever had a foreclosure or short sale? Do you have any open collections? Do you have any charged off items? So on and
Now,
so forth.
if they answered yes to any of those questions, is it a hard no, like you're not gonna buy a house ever again?
Nothing's a hard no. So that's one. I mean, at least not with somebody like me. Again, somebody that is a partner that's
Mhm.
working with your client.
Yeah,
Okay. Because if they were to punch in some of this stuff and answer some of these questions as, yes, I
like on a
have filed for
rocket mortgage.
bankruptcy.
Mhm.
Oh, you're denied. Bye bye.
Yeah,
You know what I mean? Like, so
right.
there's nuance to some of this stuff. How long ago did you file for bankruptcy? What
Mhm.
kind of bankruptcy was it? So on and so forth. But I don't want to get too into the weeds there, but
Yeah,
it's a matter of digging deeper. Okay. So
yeah.
that's why
And then,
you don't.
again, that's why it's important to have that conversation instead of just answering yes or no questions on a questionnaire.
Exactly. Yeah, you don't want to be a application. Don't make yourself a transaction. It's a very ground up, again, relationship based experience. Okay. So, yeah, there's never a no, by the way. That's one thing too. And I'll dig more into more of your question here in just a second. But that's on our end. It's not up to me as the mortgage
Right.
broker to ever deny somebody. You know what I mean?
Mhm.
It's my job to help them, whether it's going to be this next month, 6 months from now,
Mhm.
2 years from now. I have clients that from when I started back, came back to the mortgage business in 2018, 2017, that reach out to me now. It all depends on, what your timeline looks like and then how urgent you are to make that happen. Because a lot of times what people do in our industry, especially on the real estate side, is they don't dig into urgency. Like, what is your urgency? What's your timeline look like? How soon are you looking to buy? And then how
Mhm.
quickly can we buy? Okay, so timeline's important because, as you
Of
know,
course.
on our end, once we have a pre-approved buyer, we're closing in less than 30 days for sure. You know what I
Yeah.
mean? So that's up to you. How quickly do you want to make that happen, or can we make that happen? You know what I mean?
Mhm. Yep.
Did that answer your credit question? Or I feel like I might have missed a piece of it though.
Do you want me to automatically pull my credit? I think that you answered it, yeah.
Mm,
Yeah, it's not right away,
also,
you have a conversation and then
yeah. But
yeah.
in addition to that, too, on my end and some other mortgage brokers, we do have the access to do soft credit checks as well. So we don't actually even have to do a hard pull to be able to get somebody pre-approved. Okay, so a soft credit check will have no impact to your credit score. We'll need the last four of your social date of birth. There is, like I said, there's no credit actual score hit, and it'll still give us all of the scores and the liabilities. So we're able to pre-approve and qualify based off that, which is super nice because, again, you don't take the hit, right?
Okay.
Um, this is another little pro tip for you too, if
Mhm.
you have clients that are out there doing the application process with a bunch of people. Once you pull your credit one time from one mortgage lender, okay, that is public data that is shared by the credit bureaus through other companies, other mortgage lenders that buy that data. Okay. So the client will most likely, if they have not gone to optoutprescreen.com and opted themselves out of public data sharing,
Mhm.
they will get calls by probably no less than 50 different mortgage lenders or
I've heard of that.
banks
Mhm.
during the qualifying process, not places that they submitted loans with, not places that they put in applications with, just other mortgage lenders or banks that are trying to get their business from public data. Okay. So it can be a real pain in the butt. That's why the soft pull. And then once you get, all of that going, you opt out pre screen, then you do the hard pull. That way you don't experience this ridiculous bombardment and deluge of advertisement, basically. You know what I mean?
Mhm. Totally. I've heard of
So
that happening nowadays.
it's great. Like, yeah, your phone will literally be done for a whole day or two, maybe. It's hilarious. I mean, not hilarious, but it's frightening actually.
Yeah. All right. So now, like, since we were talking about credit pulls, so like, how many points do people lose when their credit gets pulled because they swear it's like hundreds and hundreds of points?
um, yeah, no, it's
It's
definitely
like
not.
a
It's
couple, right?
maybe
Like,
it might be 3 or 4 points. Yeah, I don't know
right.
exactly. It depends obviously on bureau to
Which
bureau or
can be crucial for some buyers who are like right at that, like on the
yeah, it's never gonna be a
680
make
or
or break.
720. Right.
Right. It's never gonna be a make or
Mhm.
break, and then someone on my end too, we're gonna have all the data and the ability on our end to tell you, like, maybe if you are on that very, very breaking point or precipice of what would be a qualifying at 695 versus 700 or qualifying at 724 versus 740, because
Mhm.
sometimes with different credit thresholds, you'll see not a change in rate, but a change in the cost associated or fee associated to that rate. So there could be some financial benefit to make this adjustment, make that adjustment, make this tweak, whatever. And we
Mhm.
can help with that. But yeah, on our end, anytime you're getting your credit pulled from mortgage inquiry, it's going to be a few points at the most. It's going to be
Yeah.
something that if after 60 days, I think you should see the inquiry points that you lost back on your score. It's not like something like with a collection or whatever you're going to see for 7 years on your credit, right? Unless they are able to get in contact with you. It's not like that. It's just like a 30 to 60 day, 2 or 3, maybe 4 point hit, and it goes back. So it's
Yeah.
part of buying a house. It is what it is. A lot of
Right.
times, the people that I see have the hardest time with it are those that have sort of a already kind of troubled
Low.
score to begin with, right?
Mhm.
So they're a little bit more conscious of losing a few points or 10 points or however many points it is because
Yeah.
they're already on that cutting edge of maybe not being able to qualify.
Mhm.
That leads me into my next topic of okay, well, what's the minimum score to qualify, right? So,
Yeah, that's a good one.
um, yeah, because again, go on to another one of the bank's competitors' websites. You put in an application, you make yourself a transaction, and if you don't meet their criteria, it's game over, right? And a lot of
Mhm.
times, that criteria is going to be no less than a 640 to 660 credit score. Okay, at the least with most of these places. So as a mortgage broker, which again, we're a mortgage broker here local to the community. We work with over 50 different wholesale lenders across the country. What do
Mhm.
we work with as far as FICO scores? So I've helped families funded deals close loans with FICO scores in the very, very low 508, 509, 512, what have you, right? So FHA allows for down to a 500 credit score as long as
Wow.
you have 10% down. So you never have to make the, okay, well, I just don't have a credit score to qualify because that's not the case. We can get you to a 500 plus, trust me, it's possible. It's a matter of, okay, how much do I have when you pair that with available assets, down payment, and what your scenario is. So, credit score alone, we can work with down to a 500. But it comes to, the conversation is about that person's very specific qualifying scenario as far as what they're looking to accomplish, right?
Mhm.
Most people, especially when you're a first time home buyer, you're looking to qualify with the lowest down payment possible or a down payment grant or whatever the case may be. And for those programs in specific, I'll give you the down payment grant. Like with the grant program,
Yeah.
that requires a 620 minimum. Okay.
Okay.
So still much lower than what a traditional conventional FHA loan would be at another uh, provider, right? but it does require a 620. So that's something that during conversation with my client for the very first time, okay, boom, I know that they have no down payment money available or access to down payment money via gift funds from a family member. So that's
Mm,
boom, done. Well,
okay.
we can't revisit that, at least not for now. So
Right.
now we have to go with a down payment grant. Okay, phenomenal. I have a program that will provide your down payment to you. It's not a down payment assistance program. So there is no repayment. It's not 100% financing. You're being given the 3.5% down via that grant, right?
Right.
So I need a 620 FICO. So now I'm going to dig in. Okay, tell me what your credit looks like. Tell me, again, like I said, I kind of go through that little checklist. Do you have any foreclosures, bankruptcies, short sales, open collections, chart, whatever, right?
Right.
Real easy. These are things that in a 10-minute conversation, I'll be able to drill way down into knowing very closely how to meet these expectations from that buyer. Does that make sense?
Yes.
Um,
Good stuff.
and this is again, remember, all about not making yourself a transaction or a number,
Yeah.
making yourself a relationship based person.
Yeah. So I think what I'm getting from all of this is at the end of the day, I think that once you've decided, like, hey, I want more information or I want to do this, you know, like your best answer is going to be pick up the phone and talk to somebody. And because there's just so many different scenarios that can play out and you can't really cover all of them. We can't really give examples for all of them.
Right.
Everybody has
I mean,
something different going on, you know?
1,000,000%.
So, yeah.
Yeah, I would honestly venture to say that even if you don't think that you're ready, okay, I would still, okay, if the thought has ever crossed your mind, if you are currently renting and paying rent, if you are being kicked out of your parent, whatever the case may be, okay, I would at the very least have one conversation with a trusted local professional on both
Mhm.
the real estate side and the mortgage side
Yep.
to understand what you have to do to
Yeah.
become a homeowner.
Right.
Okay. Again, who cares when that is, because you
Mhm.
first need to know that you can make it happen. Okay.
Right.
If it's the best time in the world to buy a house right now and we all have, okay, let's just say that this is
No credit.
2020. Right. Let's say it's 2021 again and we have 2% interest rates, right?
Mhm.
Are you ready to buy? Have you reached out to someone already? Do you have a pre-approval in hand? Do you know what the situation and scenario is going to allow you to afford?
Yeah.
So, I mean, that's what I'm saying is like, regardless of where the market is or what's going on, you should, and you being the person on the other end of this watching this, should have that conversation. Again, there's no obligation for at least
Mhm.
me. Patty, is there an obligation to someone to have a conversation with you?
Nope. I'm
Wow.
just here to help. I'm here to answer your questions. I'm here to guide you and,
Hey, so you're
and
just a
that's about it. And
trusted
then
local expert.
you get to decide if you're ready after we talk,
Yes.
based on all the information I gave you. You think you're ready now?
Exactly.
Does it make sense for you to move forward now? If not,
Ex
we'll talk in 6 months or next year. I'll
exactly
still be
right.
here. Hmm.
Yeah, I have many conversations and meetings with people from our community here, whether that's over the phone if you're a super busy person, or if you're one of those people that like to see me in person face to face. We will have a chat. We'll have a conversation. I can tell you what items to bring me if we want to really dig in. And at the end of that conversation, you're going to walk away with a lot more education on what the home buying process looks like, what a
Hmm.
mortgage actually is, and what exactly you would qualify for in your exact situation. But not only that, how you can, if you needed to or wanted to, improve on that situation to make you an even stronger buyer, qualifier, whatever.
Yeah,
And then
true.
once that's over, we give each other a nice handshake, and I say, I'm here for you. Let's
Hmm.
do what we need to do when we need to do it, however we need to do it when you're ready.
Hmm.
So I can't make you buy a house. You know what I mean?
Right.
Like, it's not up to me to make you buy a house. It's up
Correct.
to me to help you achieve that goal.
Hmm.
So,
Going back to what you just said, I've never had somebody meet with me in a consultation and then walk away and say, nope, like that, this isn't for me. Like usually they walk away and they're like, wow, like this sounds like I feel like now I know what I need to do.
Yeah,
And now
exactly.
like I'm like they can see it happening because now they know the steps, and
It's
usually they
yeah.
come back within like 3 months, 6 months, and sometimes even as fast as 30 days later, we're out there shopping.
100%. Yeah. And I mean, you just can't, this is too dynamic of an
Mhm.
industry and a purchase and all of that stuff to be able to understand it on your own. Like there's
Mhm.
some pretty good, I am I create content on YouTube, right? There's a lot of good content on YouTube as far and content creators, mortgage loan officers or originators just like me that are making content specific to this is how you buy a house. This is what
Yeah.
you might need. It's phenomenal. It's great. Definitely, make sure you educate yourself. But it's always going to be specific to you when you're trying to buy a house or qualify for a home loan. So,
Yeah.
yes, educate yourself as much as possible, but then you have to come and talk to an expert that's able to make it happen. Like, that's able to
Mhm.
put those pieces of the puzzle together for you.
Right.
Okay. We haven't even talked about like the actual then the loan, then the process, then that whole is another thing. We're talking about
Yeah.
just even having like planting the seed in someone's mind to make it a possibility. You know what I mean?
Mhm. Yeah. Okay, so let's move along with, my
Yes.
list of questions. Okay, so another thing that
There's
I
70
get
other questions, by the way,
yeah,
guys. No,
seriously.
I'm just kidding.
So something that I get a lot too is, should I pay off my credit card? Should I pay off my student loans? Should I pay this off? Should I pay, you know, I I don't want to have any debt, or, I'm trying to pay off my debt.
Right. Yeah,
So
don't do
then
any of
like
that until you
yeah.
talk to an expert. It's pretty straightforward like that. Like if you can just nip that in the butt right away as soon as someone
Mhm.
tells that to you,
Mhm.
and almost like a joke, right? Like honestly, it is funny a little bit, right? But no, definitely don't do anything
Yeah.
until you talk to, in this case, obviously me, because I'm the mortgage guy that's going to go through all of this stuff with them. Okay, and we're going to take
Yeah.
a look at it together. I'm going to explain to you that what does having a student loan balance across 15 student loan accounts of $75,000 mean for you as a person with student loan debt? Does that
Mhm.
mean that you have to, like a lot of people don't understand any of this stuff of what, because how would you, you know what I mean? Unless you're digging
Yeah.
into mortgage guidelines on your end, which you would never know how to
Sounds
do.
boring.
Exactly. So, but yes, don't do anything or even set out to do anything until you talk to an expert. Just go through the real easy conversation, understand what you're doing. Maybe you
Mhm.
don't have to pay the car off. Maybe you don't need to,
Right.
pay the credit card down. Or if you do pay the credit card down, what that will mean for you. Like, I'll give you a couple quick pro tips, right? On an installment loan. So, an installment loan is anything that is not in a revolving variable changing account. So, an installment loan is like a car loan, a personal loan, a title loan, something like that, an installment loan. Okay. Something that has a fixed monthly payment and monthly payoff period. Okay. When you get down to the 10th payment, okay, so let's say you have 10 payments left, okay, you originally had a
Mhm.
$40,000 car balance, right?
Mhm.
Your car payment is 500 bucks, you only owe $5,000 left. So 10 installment payments,
Mhm.
boom, we don't have to count that towards your debt to income ratio
Wow.
anymore, even though it's not completely paid off.
Okay.
So somebody might come to you and be like, "Patty, I only have like 6 payments left on my car. I'm trying to pay it off before I qualify." And
Mhm.
like we would never have to use it in the debt to income calculation anyways. See what I'm saying? Like,
Interesting. Yeah.
yeah, so any installment loan that has less than 10 payments, we automatically immediately remove from debt to income calculation.
Mhm.
One more pro tip. So student loan debt. If anytime we're qualifying as a first time home buyer on Freddie Mac or on FHA, so government financing backed by HUD, right? What we have to factor into the debt to income ratio if we have open student loan debt that does not have any reporting minimum monthly payment. So this might become less and less prevalent as we start getting into people now having like to repay their student loans, but like the
Mhm.
last few years we've had no student loan repayment. Most people have a $0 minimum monthly
Minimum
payment
payment.
because it's
And you guys
deferred.
weren't
Every
adding a minimum in there?
you factor in 0.05%, 0.05 of the balance as part of the debt. So again, I'll
Okay.
give you an actual example. If you're talking about, let's say, for example, someone has a $40,000 student loan balance across all of their student loans.
Mhm.
Okay, $40,000. All we would have to factor in is $200 of monthly debt. Okay. So where they may have, if they actually had reporting payments or whatever, they might have hundreds and hundreds and hundreds more of dollars of liability. We don't have to factor that in. We factor in 0.5% of the balance. Does that make sense?
Yeah.
So, or there's another caveat to that where if they have what's called an IBR, an income based repayment plan, which a lot of times for people with lower income, that could be actually even lower than 0.5% of the balance. Those are
Okay.
two ways to circumnavigate or, kind of mitigate student loan debt.
Okay.
Uh, Otherwise, if somebody has 50 or $60,000 of student loan debt, which is very, very common for people that have student loan debt, how are you ever going to buy a house if you first have to pay off your student loan debt?
Yeah.
You won't, actually. It'll be impossible. So, I mean, literally, it's crazy. So,
Yeah. I mean, as a realtor, I would just tell them to buy the house first, and then with the equity, when they go to sell it, use
100%.
some of
Yeah,
that equity to
exactly.
pay off those student loans instead of trying to pay
Yeah,
off the loans first before they get the house. But that's just, me being a
exactly.
realtor.
No, I mean, that's how you do it. That's what these programs are built for. That's why and we'll get back to your questions in just one sec. I just wanted to say this one thing. Home ownership is supposed to be accessible to the majority of people that, again, are qualified to make it happen. It should be accessible. Okay. You should have an ability to or an opportunity to become a homeowner, right? I know that there's like a lot of narrative about us becoming a renter society or whatever, but so many of these programs exist to give you an opportunity. Like it's there. Trust me, you can get it. You can make it happen. You just have
Mhm.
to work with the right people. You know what I
Yeah.
mean? So sorry, I'm passionate about that. So I had to
That's
get that
okay.
out.
I was gonna ask you, like, what kind of programs do you have now?
Yeah. Okay.
Um,
So we can go into the
like
program
if
thing,
you
but
have
if you have
a
more,
like if you're a buyer who doesn't have down payment, but you have a decent credit score, is
yeah,
that something that is there
100%.
a program out there for them?
I mean, I see most commonly like 75% of my conversations that I've been having this last year or two for buyers has been first time home buyers, right? People that are looking to, because the narrative of home ownership has been like super popular. I feel like. Do you feel like that? Like, I mean, a lot
Yeah,
of
it
people
could be
talk
all.
about uh, because of like where interest rates were, and then home prices were, and then the market had 58 offers on every house for a year or so. So, like, people in just society have been talking about real estate a lot lately. And so that brought up, okay, which is a good thing, people starting to think about home ownership more. So a lot of times people trying to buy a house are younger generation or, people trying to purchase their first home and they don't have 20, 30, 40, $50,000 already set aside to make that happen. So most oftenly I'm seeing one of two things, maybe let's call it three things. Unconventional programs. So conventional financing is done through Fannie Mae, Freddie Mac. Okay.
Mhm,
There's conventional first-time homebuyer programs, whether you are a first-time homebuyer or you're under a very specific area median income level for your county. You could put anywhere from 1 to 3% down. Okay.
right.
1% down to 3% down. And that's always based on the purchase price of the house. Okay. So again, we can use an example of, let's just say, a $300,000 house. You're putting 3% down on a conventional program, you're putting
Mhm,
$9,000 down. Okay.
mhm,
So that is your obligation of what you would need to come out of pocket to purchase the home.
mhm,
Now, another caveat to that, which is very nice and a lot of people don't talk about, is that can either be from your own money, from any of the people that's going on the application, or from gift funds from a family member. So,
mhm,
a lot of people, you go to college, parents helped you, okay, boom, trying to buy a house, gift funds from a family member, relative, somebody that's willing to gift a down payment to you can also be used as assets to purchase a home. So, and like I said, conventional 1 to 3%. On the 1% side, it's actually a grant that's given to you up to $4,000. Okay. So technically speaking, to get the full like 1%, you would only be purchasing a $200,000 house because
Mm,
$4,000 would be 2% of that, you meeting the other 1% difference. But
got
you
it.
can purchase, yeah, you can purchase any dollar amount. You'll get up to $4,000 in, again, granted money, not assistance, not repaid, not second lien, but granted funds. So, realistically, it's free 4,000 bucks. So very, very nice program, conventional 1 to 3% down. You would need like anywhere between like a 640 to 660 at a minimum to qualify. Somebody on my end that's working closely with you and keeping an eye on you is going to make sure that your credit's as strong as possible and how to get there.
Mhm.
And then the other two options, which would be your FHA qualifying. FHA, government insured, HUD backed, 3.5% down on a traditional primary residence. I don't know where the narrative of you having to be a first time homebuyer came from purchasing with the FHA. You don't. You just have to be occupying that residence as your primary residence
Yeah,
to use an FHA purchase. You don't just get one FHA and done. You can have that's I don't know where that came from.
okay.
Um
So if they had an FHA, 2
in the
years ago,
past,
they
they're good.
refied and now they have a conventional,
Yep.
and can they qualify again with an FHA loan?
They
Or
could.
can they apply for an FHA loan?
They could. In that exact case, it wouldn't. I would want to know why that we're having to qualify for FHA first.
Oh, like if they're
Um,
selling their house and buying. Oh, okay.
like they can do whatever they want technically,
Well,
you know what I mean? But
I
I'm
mean,
saying,
aren't the rates like way more favorable for FHA loans right now anyway?
um, technically they're lower,
Ah,
but it does depend on a couple different factors and criteria on what they're looking to accomplish. Because one thing with FHA that you
okay.
have to remember that everyone needs to be aware of is that anytime you're purchasing using FHA, you're going to have a couple different things included in the loan.
That's right.
One is you're going to have PMI for the life of the loan. Okay. Granted, PMI, or
Did they bring
actually,
that back? I thought they
no, you've
changed it. Like
always had, uh-uh,
it was for a fixed amount for a while, and then before that it was
always.
100% of the time, and now so it's 100% of the time.
The only time you won't have it's called MI,
PMI.
not PMI, but let's just
Oh,
call it PMI. The only time that you won't have that is if you put more than 10% down on a property and then it falls off after a certain period of time, I believe 6 years.
okay.
But if you're putting 3.5% down, which most people traditionally are, you're going to have PMI for the life of the loan. Okay, that's the
Okay.
first thing. Now
Unless if you
PMI
refi.
100%, and that's something that again we would be communicating with the buyer or the borrower. This is what your game plan looks like, so on and so forth.
Got it.
The other thing is, well, there's one caveat to the PMI too. On FHA, a lot of times for very specific types of clients that are qualifying with specific like FICO criterias, so like between a 580 and six, let's call it 80, the PMI factor, meaning how much you're going to be charged in PMI, is only 0.55%. Okay. So it can be a lot of times less than PMI that you would pay on conventional loans. Okay. Unless you are a very, very high qualifying FICO person on conventional. So some of the time, FHA is the better option, not just because of the lower interest rate, but because of the lower PMI. Does that make
Got
sense?
it. And then we have to remember too that there's a purchase price limit on FHA as well.
Yeah, there is.
So
I'll
we
touch on
gotta
that too.
think
But
about that too.
the other part is mortgage insurance premium. So
Mhm.
every person is going to also have a mortgage insurance premium, which is an upfront cost to the buyer. Okay, an upfront cost of 1.75% of the purchase price of the house. That's going to be an upfront cost. That's the only thing on FHA or any loan realistically that you can roll into your loan amount. Does that
Mhm.
make sense?
Yeah.
So if you are buying a $300,000 house, you are putting a 3.5% down. You have a $289,000 500 loan amount. Your actual loan amount that you're going to be making payments based off of and everything will be higher than that
1.75.
loan. It's going to
Mhm.
be higher
Yeah,
by that amount that's added and rolled in.
got
So
it. I
there's a
realized that one
couple.
time, one of my clients, he was like, "Why, if I put in, like 15,000 and
Yes.
down, why isn't the math adding up?"
Yep.
I had to
So
sit there in the car and try and figure it all out. And
this is
eventually I did.
Right. This is another super, super nerdy kind of like thing too. That if I'm going to give you this pro tip, which you will wow somebody when you bring this up to them. Even on my end, most loan officers don't even know like they get confused when they see this on a loan estimate. On an FHA loan estimate, okay, because you have a mortgage insurance premium that's being financed, the down payment that shows on your loan estimate in that part on the bottom right of your loan estimate that says down payment, seller credit, cash to close.
Hmm.
The down payment part is never going to equal the actual down payment they're putting down first. Okay. It's
Why is
never going
that?
to equal it. Right.
Why is that?
Because you have to add the mortgage insurance premium to that amount and then you will match your down payment. Does that make sense? This doesn't have anything to do with like where the money's coming from per se. It's just like
Hmm.
how it's calculated.
Okay.
It's kind of weird. And most people, like when they see their loan estimate, they're like, why is my down payment only 7,000 here? I'm putting down 14 or whatever the case may be. That's because you have to add the mortgage insurance premium to it for it to show you the proper down payment amount. It's weird.
Oh, okay.
Yeah. So next time you have a loan estimate you're reviewing with one of your mortgage partners and they don't point that out,
Hmm.
you got them. But I mean,
Oh
there's a
no.
loan for everyone. That's, kind of just circling back. There's a loan for everybody. It's very,
Hmm.
situational, what the scenario is. And then you educate them, right? What are the pros and cons and benefits to each? How do I help you achieve the goal that you want? And then what does the next 12 months or 5 years look like for you in that house, right? Are we
Hmm.
planning to refinance? Are you planning to sell the house? Are you going to keep it as a rental property in the future? Like, whatever. But the more we know about the person, the better. You know what I mean?
Right. Yeah, I do. All right. Last question, I think. What advice would you give someone?
These are some good questions by Patty, huh, guys?
I don't
She's bringing it today.
know. What if I, okay, two more questions then. What if they
Okay.
don't find the right house right away? Like what if they're like super picky and they're just gonna wait and wait before they decide to, either talk to you or get pre-approved because you know what, I'm looking for something very specific, so I'm just going to wait. What do you say to those people?
I trust me, I've had it a million times. It just depends on that person. Okay, so I first would lean with setting the proper expectations. Okay, so it sounds like in this regard, it might be this meant more for you than me because in this exact situation, doesn't sound like I've talked to this person yet, right?
Oh no, this is just a general question. This is like
Yeah,
some
yeah.
of the objections that I hear
Yeah, so I would just maybe
now.
set the proper expectation with that person, like, okay, what are you looking for exactly based on what does the time if they have absolutely no reason to, they already own a house, they're living with their parents, they're living with us, whatever, like, and
Mhm.
there's no urgency because I feel like that is the one thing that when I'm talking to somebody, I need to know from the very beginning, what is the urgency for you to become a homeowner? Okay.
Mhm.
Most of the time it's their my lease is expiring in 60 days. I need to buy a house, or
Yeah.
I have now saved up enough money to where I can make it happen, or, whatever.
Yeah.
Can you hear my dog barking, by the way?
I can.
I think she's trying to join us. Leia, come here. Sheesh. Anyways, so I would try to set the proper expectation there a little bit, but again, also there's no harm in having a conversation. So if and when that magical time comes that you're ready to buy a house or you find that unicorn out there in the market, you're
Mhm.
prepared and ready. Because again, it's no obligation. I'm not,
Yeah,
there
that's
is
what I tell them.
nothing. You just
I'm
have
like,
to,
you know what? You're gonna find the right one, and then by the time you go in and put in that application, it's gonna be like a 4-day weekend, and you may be available. You may
yeah,
be out of town, and and it might take a little bit longer
you just want to be
to
ready. Yeah,
to
just
right. You
be
want to
ready.
stay ready. You want to be
Yeah.
ready and stay ready, is
Yeah.
what I
And
tell
then
people.
with me too, when someone talks to me, they go through all of the different steps that we need to put together an actually verified and reviewed pre-approval, right? I've checked assets, employment, income, credit,
Mhm.
all of the stuff that we actually on my end I'm reviewing, I'm making sure fits the criteria of what you're trying to qualify for. You're good to go. Here's your pre-approval. I think I just talked about this the other day. As long as nothing changes, that pre-approval realistically is good forever, indefinitely, right?
Right.
As long as debt doesn't change, credit scores don't change, so on and so forth.
Um,
Now, technically, the credit report will expire and have to be refreshed on the 121st day, but that's a while. And again, like I said, still everything, as long as it remains the same, I'll just have to refresh the credit report, right? So
yeah.
there is no harm in preparing yourself and being equipped, whether you're going to be ready or not. There's no harm in ever being prepared.
Right. I completely agree. I don't even know if I need to ask this anymore because I feel like the
What is it?
overall message is, just talk to your local mortgage broker or your realtor, so that we can refer you to a good mortgage broker that we already have a relationship with and
100%.
won't treat you like a transaction.
Ew.
What advice would you give to somebody who just signed a 1-year lease on a rental?
Yeah.
Like, what would you tell them if they want to buy once their lease is up?
I would tell them to first get with a local realtor. Ideally, okay, so this is something that I'm very passionate about as well, and I take very seriously because, hmm, how do I put this? Okay, so every one of you guys probably knows somebody that's a realtor, right? You probably have a family member or a friend of a family member or somebody at your church is a realtor or whatever, okay, which is
Mhm.
phenomenal. That's great, right? The more resources that you have, the better.
Mhm.
But try to make sure that the person that you're choosing to partner with, again, remember, I first recommend going to a real estate agent, someone local to your community, and somebody that has some evidence based history of results of what you're
Mhm.
looking to accomplish. Okay. So, sure, you might. Have a conversation, chat with, or pick the brain of your friend of a friend of a friend that's a realtor, but make sure that you find and vet out another one that's local to your community that has, like I said, evidence based uh, past history of success. Okay.
Right.
So that would
Yeah.
be on your end. On
Mhm.
my end, you want to work with, please try to work with somebody local to your community. I beg of you. I
Yes,
say that
please.
not,
I
I say
agree.
that not because I'm someone that's local in the community, which of course I am, and I want to make sure that clearly I'm here to help as many people as possible. But
Mhm.
when you're not working with somebody that understands the community that you live in, knows the people that are in the community that you're going to be working with on the title company side, the appraiser side, the whatever, the real estate agent, obviously, when you not working with somebody that you can come and see face to face, and that has to be held accountable to do right by you, by the community that they live in. Otherwise, they're going to torch his building down. Then you're setting yourself up for failure. Trust me. Okay. So, it's phenomenal that we have access to these different online companies or app based pre approvals. But do you trust yourself to qualify for hundreds of thousands of dollars by somebody that is not held accountable in your community?
Yeah, I would not.
Right? I mean,
Mhm.
I got scared and I'm in the business myself. So you need to make sure that you're doing your due diligence. Make sure that you know, who you partner with again matters. It's like my
Mhm.
coin. I'm not trying to be cheesy with it, but I tag that phrase specific because it's the
It
truth.
really
Like,
does. Yeah.
I mean, like, tell us just one real quick, super bad story about somebody that decided to work with someone that you didn't know, Patty, and
I
then what
mean,
happened?
like a
Or have you
like
just always
lender
been,
or just in
yeah,
general, like
yeah, like just someone
another
that came with you,
realtor?
"Hey, I have a pre-approval letter, let's go." And then you were like, "Okay," and then, like, has that ever
Um,
happened?
yeah, like earlier on in my career, I think I ran into a couple of buyers who were either pre-approved with like a rocket mortgage type place, or another lender, like they're at their credit union, which was like across the country. So we were in different time zones. The underwriters were in a completely different time zone from them, and it was just it was complete mess because by the time I would call somebody, it was already too late. And then when they would call the underwriter, it was already too late. So it was taking like days for us to get answers over here. And it was like during a kind of a hot market, not like 21, but
Right, right,
still
right.
a pretty fast moving market. And it was just, it was a mess.
What,
Ever since then, like I really tell people like, please, like do not go with, those online bankers, I mean,
right.
mortgage companies, because I mean, if you want to, if you I mean, like, if it's gonna be a process and you're okay with it being a big old headache, you know, but clients should know that it doesn't have to be this difficult,
Right, and
especially when you work with somebody local. Like, the
yeah.
whole transaction is a lot smoother, and really, there's a lot going on already without extra drama being added to the loan process.
Mhm. And that's good because you're taking ownership of of your client's, goal, right? That's
Mhm.
important for even though it's not really up to you to make the decision, you're at least taking ownership in the fact that you're advising them and saying, "Hey, like, let me help you try to navigate or, not be
Mhm.
super disappointed based on this decision." And you
Yeah.
would think, right? Most people think that, well, I'm going to go online or whatever because I'm going to get the best possible rate, right? Which couldn't actually be further from the truth, not just on the rate side, but on the fee side as well. Because you have to remember too, when you're working with a corporation or a very, very large big box business, what we would call retail, right? When you go to retail, you're always
Mhm.
paying more for the service and product, right? Because there's many, many, many levels of people involved there, from the point of contact that you're talking to, which might be a customer service agent, then the loan officer, then the manager, then
Yeah.
the supervisor, then the
That's
director,
the
then the
other thing. Mhm.
it's just ridiculous. So you would
Yeah.
think that having to take all the risk for the service side of things, I'm going to risk it. I'll take it because it's going to be better rate or fees, but it's not. So it's like, just, yeah, good job taking ownership, kind of educating people on that fact
Mhm.
and making sure they don't set themselves up for failure. Now, have to ask you, as a realtor, what is the one most important thing to you or the thing that annoys you the most working with a mortgage lender?
Um,
Just it doesn't have to be anything super specific, but I'm sure that there's like one or two things that you could immediately, because I always get the same response from my real estate partners when I ask this exact question, and it's always funny to me.
yeah. Are you gonna tell me the response when I, give you my response?
It's up to you. You can either tell me yours first, or I can tell you what it is, and I can see how hard you laugh.
I think it's the eye roll. I think it's gonna be, like, when I send a lead and then they're like, "Oh, well, I'll call them in a couple of days when
A couple days?
I'm available."
Holy crap! Okay, well
Yeah,
that could
because
be
I'm a very, like, "Okay, let's go,
couple of
go." Like, "You
days.
decided already? Like, let's get started. Like, let's
There
move
is no
forward,"
time for
you
that.
know?
Yeah, just a pro
That's
tip
just
if
the
you
kind of person that I am, is
100 well, that's not even that's phenomenal that you're like that, but you can't, in my opinion, be in a customer service sales-based type of field if urgency is not part of your vocabulary, okay? Because
Mhm,
as you and I both know, these conversations or these sparks of courage between people, they're far and few between. You know what I mean?
mhm.
Somebody that on Wednesday was ready to let's talk, okay, it's time, boom, 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 might have already talked to 5 different family members by
Exactly.
Friday that said, "Nah, don't do it. This is not the right
Yeah,
time. Warren Buffett said the market's gonna crash." Like, whatever, you know what I
yeah.
mean? So,
That's that's another thing that I was taught very early on is,
got
"Hey,
to
if
jump on it.
somebody's already talking to you about buying a house, they've already mentioned it to, like you said, like 5 other people, and
100%.
your hairdresser, their brother, their neighbor, and what are they all saying? They're all saying, "Oh, well, I have a great realtor. Oh, I have a great, you should talk to
Mhm.
them." And, if you don't call them back right away, they're calling these other 5 people, and whoever gets to them first is, like, they're the ones who are gonna get the opportunity.
Yeah,
So that's
and
why I like to
I
yeah, I
have
like to
some,
hit the ground running. Like, when somebody
yes.
calls me, I'm like, "Okay, let's do this. Let's move forward. Let's do a consultation. Like, are you available today or tomorrow?"
100%. And I
Yeah.
actually encourage some of my real estate partners too that kind of lack on their end with urgency, urgency, urgency. Because again, I have that just system in place with all my real estate partners as far as get me on a group text right away, please.
Mhm.
I'm going to respond right away. And we're going to start building that trust factor and communication, right? Get me
Mhm.
on a group email. We're all going to be talking together and now know okay, this is the expectations and what we need. But if that's not enough, then I actually tell a lot of my real estate partners too, when you're with them right then and there, and they're starting to bring up that conversation, I have a phenomenal mortgage partner that is more than willing to take 10 or 15 minutes out of his day to have a conversation with you. Let's call him.
Yeah.
Boom, three-way call me right then and there to at least be able to just spark that fire. You know what I mean?
Yeah.
because trust me, you want to jump on it. Like that's the hardest
Yeah,
part of our business or any business is the I don't like saying
the
lead because I like
urgency.
but the opportunity. You get the
Mhm,
opportunity to work with somebody, right?
mhm.
People spend hundreds of thousands of dollars buying Zillow leads or buying Redfin leads for an opportunity to speak with someone. So
Yeah,
as a realtor or someone on my end, I cannot squander that opportunity. There is no time to waste when it comes to somebody being like, I'm golfing right now. I'll call you back on Friday. You know what I mean? So,
yeah, yeah.
but that's always
And
the
it
one thing.
and
By the way, real quick, I always ask them, I'm like, what's the one thing that bothers you the most? Or what is your number one thing that you have to get from your lender? Communication for them to answer the phone. And I'm like, wow, dude, that is such a low barrier of entry, but
Yeah,
I guess it's the biggest problem that realtors have with their lending partners, so
mhm.
yikes.
Yep. I was gonna say
Hilarious.
something else, and now I can't remember what it was.
Come on, you can remember.
Yeah.
What is it? Communication based?
It was around along those lines, yeah. I'll think of it, and then
Okay.
I'll let you know. But,
Alright,
yeah, I
cool.
mean, that's number 1,
100%. It
communication.
has to be. And
Yeah.
I think you should, I think too, like probably know from a very early point with working with a client and then the client working with you if your guys' communication is going to work and be a fit for each other, right? Because like
Mhm.
everybody communicates a little bit differently. I think that that's missed with some people too, is like, how do you want to communicate with me? Like I said, do you want to talk on the phone? Do
Yeah.
you like to text message? Do you want to come to my office? Now, because I've been in this business basically my whole life, I'm second generation in this business. I remember being the little guy in my mom's car in the 90s, driving from place to place and office to office and house to house. And you know what I mean? Like boots to ground, physically being there, doing a pre approval on the spot or whatever. So, just because of that very reason, I do the same thing. If I need to come to you, trust me, I'll be there. If I need to
Yeah.
come pick up some pay stubs from your house, boom, I'm right there. I'm picking them up. You know what I mean? Like,
Mhm.
I think that's also a very niche thing that I do that is, not like the others.
Mhm. Yeah, I've not heard of anyone doing that. Maybe very no.
Yeah.
Yeah,
Not really a thing anymore, not since the 90s.
it's not, no. Um,
Cool. What else? How else can you set yourself or our buyers up for success here in the new year? Because I feel like this market is popping off. It is starting to get real crazy, and
mhm,
I'm not saying that as a sales pitch, guys. I'm literally trying to tell you it's starting to become more active in the market because of where we are. It's almost tax season. People are starting to get their tax refunds here in the next few months. They know that.
mhm. Yeah.
Interest rates are starting to cool down a bit, and with uh, interest rates is less of the problem. It's affordability. So as rates start coming down, more people can afford the house that they wanted to buy last year or 6 months
Mhm.
ago, whatever. And then again, the availability of some of these programs. So
And I feel like a lot of people are kind of done waiting again. They're on their second round of done waiting. I had a couple of these clients in like 2020,
mhm.
who would literally say, "You know what? We're just tired of waiting. Pandemic or
Oh,
not, we're tired of waiting. We're ready to go."
yes. Let's
So I
go.
feel like that's when this new wave of people who are tired of waiting,
Yeah,
it's gonna come in
because
this year too.
so you're in the Summerlin area. Like, what in your area where you live or where people want to live in Summerlin? What is the average like rent for a 3 or 4 bedroom house?
I'm more northwest. I'm in Providence,
Oh,
and up
okay.
here it's like
Okay.
around 2,500, just under
20.
3,000
Okay.
for rent.
Yep. And then I would say similar to where I'm at in the south side of Vegas, like right here in Henderson, like on the cutoff, in the
Mhm.
St. Rose area by Anthem, I would say probably very similar here too. 3 bedroom, 4 bedroom,
Mhm.
2,500 to 2,700 bucks. Maybe as you start getting a little bit deeper south into, up the hill in Anthem, maybe 3,000s. So you're talking
Okay.
about like 30 plus grand a year or
Yeah.
so, somewhere in that neighborhood of rent money each and
Mhm.
every year that you just don't have this conversation. Yikes.
It gets expensive.
You know what else is expensive? Cars. Cars are expensive, man. Have you seen
Extremely
like what's
expensive,
going
yeah.
on with cars? Like
Yes.
it's insane. Hopefully that gets a little bit of reprieve here as interest rates start coming cooling off a little bit, but dang, dude. My
Mhm.
lease is up on my car in April, and I'm a little nervous.
Yeah, it's gonna be bad.
Should I lease or buy, you think?
I'm not too familiar with leases, to be
Yeah,
honest with
this was my
you.
first one. This was my first lease actually on my I have a Nissan Rogue, and it's been pretty nice actually.
Yeah.
But
I think
yeah.
you should try, like, CarMax. I feel like that was we did some
Yeah.
car shopping a couple months ago, and we went to CarMax, and that one we were able to find the best deals there.
Yeah, yeah.
Yeah.
Here's a question that I have for you. Maybe we can end on this unless you have some more that you wanted to talk about, but this is something I think about quite often. If, in your opinion, let's say you're a buyer,
Mhm.
does the car that your realtor drive matter to you?
I don't maybe to a point.
Okay. Like what?
I
Like
think
if
the
you're
I think
Go
the
ahead.
cleanliness of it matters more, to
Yes.
be
Okay. I
honest,
like
because if I
that.
see
I
a
like
guy
that.
roll up in, like, a Tesla or something more high end, and it's dirty on the inside and the outside, I'm
Ew.
gonna judge him a lot more than if it was like a I don't know, a Civic.
Is driving in a realtor's car still a thing, or do you guys follow?
Follow.
Follow.
Unless
Okay.
if
Yeah.
yeah, unless I usually have my clients follow unless if they're like, you know, they
Super
have
close
a hard
friends.
yeah. A super what?
Super close friends or something like that, or
No, even them, I have them follow. Um,
nice.
unless if they're visiting from out of state
Oh,
or
okay.
if a lot older and they're not familiar with the area and they're not comfortable driving, then I'll put them in my car. Um,
Cool.
yeah, but yep, that's it.
Nice.
I mean, I try to keep my car clean personally in
Yeah.
case they like even if they walk up to my car or past my window or something and they can see it.
Mhm.
Yeah. Just feel like it says something about you.
100%.
So
Yeah, definitely.
it's not so much about the car, it's just how you take care of it.
Yeah.
How yeah.
I like that. I like that answer. Good job. Cool.
Thank you.
What else? Anything else for me?
Um, no, I don't think anything else right now. This was
Cool.
really good. You answered a lot of questions. I think you know, put a lot of perspective into what it takes to get pre-approved. And I
Yeah.
guess just to wrap up, like just talk to somebody. You know, there's no black and white answers. There's no right or wrong. It's literally like we need to
Literally,
have
yeah.
a conversation. Same
Mhm.
thing with the market and buying. Like, is now a good time? Depends on a lot of things.
Mhm.
You know, it's not a yes or no answer.
Yeah, there is no one blanket answer to any of these questions, right? If somebody asks what's
Mhm.
the minimum credit score that I can qualify for, trust me, there's a black and white answer to that. But what does that mean to you? Like, you know what I mean? Like, what does that mean to you?
Yeah.
So, hopefully you guys are able to find somebody in your community that's willing to take the time to have these conversations with you and do the necessary steps to set you up for success.
Mhm.
Um, One of the reasons that Patty's, of course, here on this live stream with me is because she is one of those individuals, one of those professionals in the community. Otherwise, we wouldn't be talking about together. You know what I mean? So I like to see myself as one of those individuals. And,
Mhm.
again, evidence based history. I tell all of my clients and my real estate partners all of the time. Trust me, I know that I can make things sound phenomenal. I'm a good talker. I love sales, whatever. But just go and take a look at my Google reviews, take a look at
Mhm.
my social media pages, take a look at what my clients and partners say about us
Yeah.
from
Testimonial.
experience working with us. You know what I
Mhm.
mean? So,
Yep.
evidence. Show me the evidence.
Totally agree.
Boom. All right, cool. So I'm down to do this again in another week or two if you have another 84 questions to fire my way.
All right.
Because
I'll
I think
keep
this
that in
stuff is
mind.
super valuable. Yeah, this is super
Yeah.
valuable for the community. We'll have like new topics maybe to talk about, or maybe
Mhm.
during this time to the next one, pick out a situation or two from the person or persons you talk to, maybe.
Yeah.
Obviously, we'll
Definitely do
omit
that.
the specific details, but yeah, that would be fun.
Mhm.
And we'll talk about how you're crushing it here in the beginning of the year.
All right. Sounds good. Thanks so much,
All right,
Mario. Appreciate
buddy.
it.
Thanks for coming, guys. I appreciate it. We'll see you next time.
Bye.
Bye. See ya.